Top of the day to you, folks. Bill Hubbard, Coldwell Banker Executives in beautiful British Columbia. What's going on in the real estate market in BC? Well, it's first of all, it's kind of a good news, bad news story. So, the bad news is the Lower Mainland. There's a fellow named Brendan Augmanson, and he is pretty much the authority on real estate in British Columbia. He's the chief economist for BCREA, which is the BC Real Estate Association. Brendan Augmanson says this is the worst sales in the Lower Mainland this century, which is kind of sensationalizing, but it's the worst sales in 25 years, and of course that means this century. But yeah, you also have to remember that the Lower Mainland was booming for the longest time. So Toronto's the strongest economy in the country. Vancouver's the second strongest economy in the country. These two areas resist downward pressure on the market, on the real estate market, more than any other area in the country. So what is it that actually pushed these two areas down to one of the worst areas in or worst markets in 25 years? So you have to ask yourself what was driving these areas, and the answer to that question is immigration. So if that's what was driving these areas, what changed in immigration? And the answer to that question is the ban on foreign buyers that was brought in by the federal government. That ban is scheduled to be lifted on January 1st, 2027. So the anticipation will probably make a difference in the market. But right now, there are no indicators that the Vancouver area are going to recover in 2026. It seems weird, but they probably will, just because it's been down for a while and the bounce back factor is going to be there. The good news story of the market is the interior of British Columbia is starting to recover. You can't overemphasize this. It's just starting to pick up a bit. The inventory is starting to inch down. The absorption is starting to inch up into balanced market territory. Sales are starting to increase a bit, but it's very subtle, and you're not going to see a great deal of increase in 2026. I suspect you'll see a 3 to 5% increase in sales and a 2 to 3% increase in prices. Not much, but definitely going in the right direction. So again, one of the things that's pushing this market is the ban on foreign buyers. That's what's keeping it down. One of the things that's pushing it in the opposite direction is the interest rates. So interest rates, when COVID happened, the market dropped. Sales dropped in the first 2 to 3 months about, in some areas, 60% across this country. Massive downward change. The whole real estate market was about to collapse. So what did the government do? They dropped the interest rates like a rock, which did what they intended to do, but it overreacted. It was the biggest boom we had ever seen. And so what happened after that is that now the government's got to slow the market down. And so they started raising those interest rates. They went all the way down. That overnight lending rate, it's called, or the Bank of Canada rate, went all the way down to 0.25%. So basically free money. And it stayed there for a while the market blew up into this massive boom. So then they had to do something to slow it down, and so they started dropping it down. The last two announcement of 2025, that rate was at 2.25%. So less than half of what it was at. To give you an idea of comparison in history, the average 5-year closed interest rate for the last 30 years was 5.92%. You can actually get money for 5 years around that 4% mark, 4.5, somewhere in there. So we are lower than the average for interest rates for the last 30 years. So interest rates are probably going to inch down a little bit in 2026, but you gotta sort of accept. People are going to have to accept we're about where they're going to stay. They're not going to bring them down and watch the market start to dramatically pick up. The Bank of Canada likes to keep inflation around 2%, and it's right now at 2.2%. It's perfect. It's where they want it. So the interest rates are going to push the market into recovery a little bit. You'll probably see a little bit of recovery in the Lower Mainland, even though there's no indications in the statistics The inventory is still high. The absorption is still low and into that buyer's market territory. However, the bounce back factor, the economy in Vancouver is too strong to keep down for too long, if that makes any sense. So, in summary, what you're going to see in 2026 is the lower mainland of British Columbia is likely going to show signs of recovery. It already is showing signs of recovery. As long as nothing else negative happens, you will see it continue to go along this very mild recovery path. The lower mainland will probably start to get into that area sometime this year. But really, there's no indications of that. It's not going to stay down for long because the economy is too strong. That's the real estate summary going forward. But you always have to remember that's just the world according to Bill.